empire rise, systems break. History leaves scars that never fully disappear.
For a long time, people could still imagine that a war in the Middle East would remain mostly regional. It might shake oil markets for a while, trigger diplomatic alarm, and dominate headlines for a few days. But many outside the region still assumed the real damage would stay close to the battlefield. That assumption no longer fits the modern world. Today, Middle East wars do not stay in the Middle East because the region sits on top of systems the rest of the world still depends on: energy routes, shipping lanes, air corridors, insurance markets, data infrastructure, and industrial supply chains all run through or around the region. Once conflict begins to disrupt those systems, the war stops being a local security crisis and starts becoming a global economic event. Reuters reported this week that the U.S.-Israel war with Iran has already sent shockwaves through global business by disrupting major trade and energy routes, pushing up oil and gas prices, and forcing businesses across sectors to react. That is why this war feels different. The map still shows a regional conflict, but the consequences now travel much farther than the missiles do. When the Strait of Hormuz becomes dangerous, oil and liquefied natural gas shipments are disrupted. When Gulf airspace becomes unsafe, airlines reroute or cancel flights. When maritime insurers reprice war risk, transport becomes more expensive. When all of that happens at once, businesses in Europe, Asia, and North America begin paying part of the price. This is the hidden logic of modern conflict. War no longer spreads only through armies and alliances. It spreads through infrastructure and dependence. Runners reported that tanker traffic through the Strait of Hormuz came to a near standstill, with at least 200 ships anchored outside the route and unable to reach ports. While the strait itself carries around a fifth of the world's oil and LNG supply. That is why the old idea of a regional war is becoming less useful. In a tightly connected world, some regions matter more than others, not only because of their geography, but because so much of global commerce, energy, and logistics has been built around them. When those regions are hit, the shock does not politely stay where it started.
When oil stops moving, the shock does not stay in the desert. It travels through the whole world.
The first reason Middle East wars no longer stay in the Middle East is energy. Modern economies still run on fuel. Even when they talk constantly about transition, decarbonization, and resilience. Oil powers transportation, freight, aviation, petrochemicals, refining, and much of the industrial system. Natural gas supports electricity, manufacturing, heating, and a wide range of business activity. When a war threatens one of the world's most important energy arteries, the consequences move quickly into prices, margins, inflation, and growth. That is exactly what is happening now. Reuters reported that disruptions through Hormuz pushed analysts to warn that Brent crude could rise to $120 per barrel if tensions persist for a few more weeks. While Goldman Sachs said oil could move above $100 if flows do not recover. Reuters also reported that the current conflict has already produced some of the strongest weekly oil gains since the pandemic era. And oil is only one part of the story. Liquefied natural gas is also exposed. The Strait of Hormuz is a major route for LNG shipments, and the current conflict has already shown how fragile that system is. Once supply becomes uncertain, importers in Asia and Europe start scrambling for replacement cargoes. Freight rates climb, and the cost pressure spreads beyond fuel itself. This is why a war in the Middle East can become a global inflation problem. When energy rises sharply, shipping gets more expensive. When shipping gets more expensive, goods become more expensive. When fuel costs jump, airlines, manufacturers, logistics operators, and consumers all come under pressure. The conflict does not need to shut down the global economy directly. It only needs to make a critical part of the energy system unreliable. And not that everyone starts paying more. That is the first big lesson. A Middle East war no longer stays regional because fuel is global. The battlefield may be local, but the energy consequences are not.
What begins as a regional crisis never stays regional when energy, trade, and fear are tied to the same narrow corridor.
The second reason Middle East wars no longer stay in the Middle East is transport. Globalization depends on the smooth movement of goods, ships, aircraft, and cargo. It looks strong because trade is always moving. But much of that movement still depends on a small number of vulnerable routes. Once one of those routes becomes unsafe or too expensive to use, the effects spread quickly through business planning, freight markets, and supply chain. Hormones is one part of that problem, but not the only one. Reuters reported that maritime insurance premiums surged as the Iran conflict widened, while London's marine insurance market expanded the Gulf high-risk zone. That means the cost of moving cargo rose sharply even before every route was fully blocked. Insurance still existed, but the price of risk itself became part of the economic shock. Air travel was also hit. Reuters reported that the conflict disrupted key air corridors across the Gulf and created one of the worst regional aviation shocks since the pandemic, with airlines rerouting or canceling flights and businesses facing longer journeys, higher operating costs, and broader uncertainty. The conflict also affected hubs such as Doha and Dubai, which are not only travel centers but also critical connectors for business travel, cargo, and international coordination. This matters because business does not depend only on demand, it depends on circulation. Companies need routes to stay open, safe, insurable, and predictable. Shipping firms need confidence. Airlines need usable airspace. Importers need schedules they can rely on. Once those conditions weaken, transport stops being background infrastructure and becomes part of the shock itself. That is why even a geographically limited war can become a much wider disruption. It reaches companies that have no presence in the Middle East, would depend on the route, energy, or timing that pass through it. This is also why firms such as Maersk began suspending services linked to the region. When movement becomes uncertain, business everywhere becomes more defensive. The third reason Middle East wars no longer stay in the Middle East is confidence. Markets, investors, and companies do not wait for the worst-case outcome before reacting. They move when visibility collapses. Once they believe a war could keep energy expensive, shipping risky, and planning difficult for more than a few days, they start adjusting behavior immediately. They delay investment, protect cash, raise prices, scale back exposure, and prepare for weaker conditions.
A regional crisis becomes a global threat. The moment energy routes turn into battle lines.
That is why this conflict is bigger than the battlefield. Reuters reported that investors were clinging to so-called shock over trades. The Iran war drove economic visibility close to zero. Reuters also reported that economists and analysts warned of a possible wider global slowdown or recession if the conflict drags on, because the war is hitting a world already burdened by trade friction, inflation sensitivity, and fragile supply chains. Timing makes everything worse. This is not a calm global economy absorbing a one-off disruption. It is a stressed system taking another hit. Shipping has already been strained in recent years. Businesses are already more cautious. Investors are already primed to react quickly to geopolitical shock. That is why even a temporary Middle East crisis can trigger outsized global consequences. Reuters' commentary also noted that Gulf economies themselves are already seeing weaker growth expectations because of the conflict, which shows how quickly the regional damage spills into broader economic calculations. This is the deeper meaning of the phrase, Middle East wars no longer stay in the Middle East. It does not simply mean that other countries may get dragged into the fighting. It means the modern world is so tightly connected to the region's roots, resources, and risk structure that a war there now travels through prices, logistics, business decisions, and market psychology far beyond the region itself. History teaches the same lesson again and again. The most dangerous wars are not always the ones with the biggest armies or the largest battlefields. They are often the wars that strike the system everyone depends on, but almost no one notices until they start failing. That is why this story matters. If you want to understand where the next major global shock could come from, do not just watch the missiles. Watch the choke points, the tankers, the insurance markets, the flight paths, the energy routes, and the confidence that keeps all of them working. Because that is where the real story begins. And if this is the kind of breakdown you want, not just what happened, but why it matters and how it fits into the larger logic of power, war, trade, and global systems, then stay with this channel. We are not just following events, we are mapping the forces underneath them.
We are not just following events. We are tracing the forces that move them.